Hi there, welcome to Commodities. We've got a full menu for you today: gold, lumber, and oil. First, let's check out the energy complex, though. No joy for the oil bulls. We did see West Texas Intermediate oil dropping below $55 US a barrel. First time that's happened since early 2021. Now, oil is slightly above that level, but still down 3%. And Bloomberg says that Middle Eastern crude prices are entering the bearish pattern known in futures markets as contango. And the same has already happened with some barrels sold on the US Gulf Coast. That means near-dated prices are cheaper than contracts for delivery further away. And that often betokens a glutted market. On the WTI futures curve, the front month still slightly above the following month, but it was a gap of only about 9 cents. So a bearish pattern in the commodities markets or the energy futures market right now. And let's check out the metals. We finally got U.S. job numbers that were delayed by the shutdown. Job growth was sluggish in November, and the unemployment rate in the U.S. hit a 4-year high. Normally, you'd think that would point to further interest rate cuts by the U.S. Federal Reserve, and that tends to be good for gold. And sure enough, gold is higher today, trading close to record highs. Quick look at where the agricultural commodities are trading. Not much joy there for the farmers, especially in the United States. They've had a tough year with the soy market cut off in China, even though Beijing has begun to open the gates a little bit to soy from the United States. Let's check out shares in Ovintiv, the oil and gas producer. That company has signed on as a long-term partner for the Cedar LNG project that Pembina Pipeline and the Haisla Nation are constructing on the West Coast. It's a 12-year agreement, and it'll see 500,000 tons of gas a year shipped from Ovintiv's natural gas fields across BC to that floating LNG facility in Kitimat. Guinea is in talks with Emirates Global Aluminium over a possible bauxite supply agreement. According to Reuters, the pact would see the company source the aluminum feedstock from Guinea's state-owned Nimba Mining. This West African nation has a military-led government, and it revoked the license of EGA subsidiary Guinea Alumina in July after a dispute over construction. It then handed the mining assets over to Nimba Mining, which plans to resume production this month. And next year, we'll see the first ever global decline in annual solar power installations. That's after the weakest growth in 7 years this year. That's according to an outlook from Bloomberg. Developers are set to add 649 gigawatts of solar power capacity in 2026, which would be slightly down from this year. Policy shifts as well as saturation in major markets have been tempering demand. Well, let's get to gold. Shares in Lundin Gold have soared more than threefold this year. There is a look, and it's up. Look at that, almost fourfold in the past 12 months. The company is one of the lowest cost major producers globally. Its Ecuadorian mine, Fruta del Norte, produces about 500,000 ounces of gold annually. Let's welcome Jamie Beck, CEO of Lundin Gold. Jamie, thanks very much indeed for joining us.
Hi, Andrew. Thanks for having me.
Your stock's done well. It looks like it's the second best performer in the TSX Global Index this year, which has been a hot category, needless to say. I notice now that apparently none of the analysts have a buy on you. They're all at hold because people are saying, the stock could be fully valued.
Yeah, I think one of the things that's difficult to get across with some of the analyst reports is really how excited we are with the exploration potential here. This has been a incredibly active geologic environment, and we have been discovering significant potential new deposits, not only on the gold side but also in some copper and gold. So it's hard when you're staring at sort of the quarterly production figures to really bake that exploration upside into the share price, but we think it's firmly there.
You just came out with your 3-year outlook, and one big decision that's expected is this Fruta del Norte South. Give us some numbers there. If you develop that, how much would it add to your production?
Yeah, we're sort of putting the initial resource and reserve estimates together at the moment. So I don't have, exact numbers, but we have an initial view that this could add upwards of 2+ million ounces, I think, into the overall life of mine plan. I don't see that that's necessarily going to mean that we would exceed that sort of 500,000 ounce a year production figure, but the hope would be that we'd be able to extend the mine life by bringing that FDN South material into the mix.
Now, your cost base is pretty low. I mean, it's below $1,000 US an ounce. I mean, it's got to be among the lowest of major gold miners. Pretty nice when we've got gold at $4,000 plus. You're making plenty of money right now.
Yeah, it sure is. This is a very, very special asset, and the grades that we're mining underground help guide that low cost production. Has really provided some operational excellence in terms of not only our production but also costs, as you suggest. So yeah, certainly at these gold prices, we're making good margins.
Scotia says that the costs were a little bit higher than they had forecast, but they do say expansion could bring down that cost. It's interesting, though, that part of this is employee profit sharing that's adding to the cost base.
Yeah, that's right. For every $100 of gold price increase, we add about $10 into our overall cost based on the royalties and the employee profit sharing, as you described. So, our previous guidance in 2024, when we put out guidance for this past year, we budgeted that at $2,500 an ounce gold. So as we're sitting here north of $4,000 an ounce. That royalty and profit sharing adds upwards of $150 to our cost basis, but certainly I'll take that increase in cost at the higher gold price.
Right, and you're spending something like, is it in the next year you plan to spend more than $80 million on exploration, your biggest ever?
We've got our biggest program ever. You're right. About 120,000 meters drilled in 2025, and we're planning about 130 some odd thousand meters in 2026. There's an $85 million program going, and really focused on 3 key areas, Andrew. Number one is replacing reserves. So we've been incredibly successful at Fruta del Norte at replacing the gold that we've mined every single year. Number 2 is sort of in some near mine exploration where we've had great success, both gold as well as copper gold. There's a number of new copper gold porphyry targets that look incredibly exciting. And then there's just a huge land package. This project was picked up by the Lundins in the mid 2010s. And a lot of the effort has been on really building FDN and getting it up and into production. And now we're casting the web further afield and going to do a bit more regional exploration. So it's really exciting.
It is interesting. Ecuador doesn't have as developed a mining industry as somewhere like Peru or Chile, and it was seen as a tricky place to do business. I mean, there were protests back in 2020, I remember.
Yes, it's for all of its geologic potential, there's been challenges, of course, in terms of getting projects off the ground. We've had, just a wonderful experience in Ecuador, working with the government, working with the local communities. All the stakeholders have been incredibly supportive of what we're doing at Fruta del Norte. So, I really hope that there's a number of projects that are sort of in the pipeline. I think that would be incredibly beneficial for Ecuador, for their people, for the government, for the country in its whole. And so we're certainly cheering on the sidelines that we can get more projects going. But for now, this Lundin Gold and Fruta del Norte is a pretty important player in the Ecuadorian mining space.
Yeah, are you the biggest mine in Ecuador?
Well, we're probably the largest taxpayer. There is a Chinese operated operation, the Exa mine. That's the Mirador. It's a copper gold deposit that's just to our north. It's a big open pit, so it's likely a larger mine from a production perspective. But yeah, between between those two, those are probably the two biggest in country.
We'd better jump. Thanks very much, Jamie.
All right. Thank you, Andrew.
Jamie Beck, CEO at Lundin Gold. Up next, we are going to look at the challenges facing the Canadian lumber industry. The protectionist measures introduced by Washington are just one of the problems. We'll be right back. Our guest is here to help explore the question, what options are left to alleviate the pressure on Canadian lumber producers? This comes as the total effective tax burden, aka levies imposed by the US, on the average Canadian mill has risen to more than 45%. We're joined by Mark Parsons, Chief Economist at ATB Economics. Mark, thanks very much indeed for joining us.
Thanks for having me, Andy.
The pressure on the sector is just relentless, and you have a chart for us that shows the pretty steady decline in our lumber, our forest exports to the United States.
Yeah, I mean, this is an industry that's been hit on a number of fronts. This is just the latest, as you mentioned, 45% effective tariff rate. That includes 35% on those duties that went up from 15% since Trump took office. But even before Trump 2.0, this is an industry that has long faced tariffs, or duties as they call them in the industry. Mm-hmm. And then the industry, it's gone through the U.S. housing collapse, wildfires, a number of mountain pine beetle. So there's just been a number of challenges that have inflicted this industry. And this is just the latest.
It is interesting. You mentioned the mountain pine beetle destroying just swathes of the Canadian forest. And BC in particular is a high-cost jurisdiction. It's hard to compete.
Yeah, I mean, if you really look at the last couple decades, it has been a BC decline in the industry. Other provinces have held up relatively well, but they're also down. So you've seen a number of things happen. The mountain pine beetle disproportionately hit BC. Then you add the duties on top of that, mm-hmm. and then some more domestic policy issues. It's just created a very difficult environment. And the latest is you have West Fraser coming out announcing that they're closing the 100 Mile House mill, which is 150 to 200 jobs. Mm. But it's not just BC. Here in Alberta and high level, West Fraser's announced they're going to curtailing indefinitely their operations, which is about 190 jobs. So this is the industry in turmoil right now. The federal government has come out with some measures, and we're going to have to wait and see how effective they are.
We actually talked to Tim Hodgson, the Minister of Natural Resources, yesterday. He's launching this task force. I mean, there's only so much he can do. But it was interesting. He seems to be interested in exploring with the industry a fundamental change in the way it does business, in particular focusing on the Canadian market with value-added products.
Yeah, I mean, that makes a lot of sense. This has been the response, right, by Canada to the Trump tariffs. I think the challenge with that is this is a very export-oriented industry. Mm-hmm. The vast majority of its exports go to the U.S., that's a longer-term play. If we can get more domestic supply added to the market, that's fantastic. More value added, mm-hmm. That's also something we can do. We also need to look overseas markets. But I consider that more of a long-term solution, Andy. Mm-hmm. I think in the near term, we need to deal with the U.S. That's the only thing that can really alleviate this. Hopefully we'll get a bounce back in the market too. U.S. housing starts likely will pick up next year. This is an industry that very much depends on the state of the U.S. housing industry. Mm-hmm. So I'm looking for maybe the U.S. will kind of see Canadian lumber as, well, putting tariffs on this stuff is just raising our costs to builders mm-hmm. at a time where affordability is a major concern in the U.S. with 3% inflation. Maybe this isn't the best idea, especially when Canadian lumber is of high quality.
It always interests me, though, that the U.S. lumber interests seem to have the ear of politicians in Washington, and the home builders can't seem to get that message across.
Yeah, there's just this ongoing battle between the two groups. U.S. lumber producers are saying, Canada is flooding the market. They're subsidizing their product. There's no evidence of that, as far as I can tell. Then it just gets held up in dispute. And right now, if you listen to home builders, they're saying, look, this is raising our costs. You got to stop this. And it is. I mean, the BDL, the Business Data Lab, done by the Canadian Chamber of Commerce, talks about the combination of lumber tariffs and other tariffs that the U.S. is imposing is adding about $14,000 to the price of a home in the U.S. So I think really with the U.S. still struggling with inflation, they're going to want to rethink whether this makes a lot of sense for them right now. And the truth is 20 to 25% of the lumber that's needed in the U.S. is supplied by Canada, and you can't replace that overnight. And the industry does not have the capacity to ramp up to fill that gap.
How much does it add roughly to the cost of a U.S. house?
Well, look, these are just estimates done by the Canadian Chamber of Commerce. But if they look at the additional tariffs that are being added, so steel and aluminum and lumber and all those things, is building to, all these tariffs are adding about $14,000 to the cost of a home.
That is amazing. Yeah, we'd better go. Mark, thank you very much indeed. Always great hearing from you.
Yeah, thanks for having me.
Mark Parsons, Chief Economist at ATB Economics. Coming up, there are prospects of a peace deal in Ukraine. It's just one factor that's been driving down oil prices. We're going to look at that, and we're also going to look at what could be America's real motives in putting pressure on the Venezuelan regime. That's ahead. Despite geopolitical threats to oil supply, crude in North America has now dropped to about $55 US a barrel. Today, it hit the lowest level since early 2021. We're joined by Jason Schenker, president of Prestige Economics. Jason, thanks very much indeed for joining us. What is the latest on oil? Why does it keep dropping? Is it just fears of a glut becoming entrenched?
Yeah, thank you for having me here today, Andy. It's great to see you here at the end of the year. I think there's a few things driving the price down. I think on the one hand, you've got increased optimism that there could be potentially a deal coming in the future in the Russian war on Ukraine, that there's some progress being made there, however slow, but that could be pushed along. If you were to see that conflict reach even a tentative armistice, let alone a longer term kind of peace, I think that would further weigh on crude oil prices. You've got that risk. At the same time, you have some risks of the global economy slowing, some risks around the U.S. economy that have emerged, and we see the jobs data out just today that seem disappointing. And I think there's a number of factors there, but I do think it's primarily driven around the increased potential for that Russian oil at some point to enter the market, and that could weigh on prices.
And we have a chart, I think, showing the vast amount of Russian oil that's at sea, bobbing on the waves. And so if there was a deal in Ukraine, and let's hope there is, to end that horrible war, could a bunch of Russian oil just go on the world market abruptly?
Well, that would be the expectation. And even if it doesn't happen right away, right, we all know, right, there's a forward curve and there's an ability for the activity that would happen in the future to immediately get priced into the prompt month because we see it priced into those future contracts. So even if it doesn't abruptly enter, the impact price-wise could be abrupt across the entire forward curve. And of course, we know Russia's been selling this oil sort of off the global market to certain customers at deeply discounted prices. So if that oil entered the global market, then you could presumably see a further leg down in prices, at least in the short term, at least until the global economy strengthens. And of course, those manufacturing PMIs that we so often have talked about, which are key proxies for global manufacturing, global economic activity, they contracted for the US, the Eurozone, and China in the month of November. So it'll be really important to keep an eye on those going forward. But if you have a mix of more oil and global manufacturing weakness, that's a recipe for some bearish price action.
Is Washington really after Venezuelan oil? Or, I mean, we know the administration talks about attacking drug traffickers, but I mean, Venezuelan oil is important to the United States, isn't it? Some of the refineries along the Gulf Coast need that type of crude.
Yeah, so some of that crude has historically gone into the U.S., right? We have seen that over time. I think that the situation with Venezuela is part of a larger national security strategy that has been shared out of the Trump administration by the president at the end of November. And we've seen within that document a focus on sort of a Trump application of the Monroe Doctrine, which is to sort of secure the Western Hemisphere. And Venezuela has long been at the heart of the axis of sanctions evasion, right? Having different collaborations with Iran in terms of crude and product swaps, having close relationships with Russia, where there's concern that Venezuela could be used as a military foothold at some point, and growing close relationships with China, where that's also something that I think the administration wants to counter. A lot of what we see coming out of Washington has everything to do with Cold War II, the conflict we are in right now, in which the United States and its allies are beginning to pit themselves more seriously against Russia, Iran, and Iran's proxies, China, North Korea. You can see this has been gathering strength. I know we've talked about this a number of times, and I had a book out on it early this year, which became an international bestseller. Cold War II is the big conflict of this century, and everything we've seen in the last couple of years in terms of conflicts revolves around this. And we see it in that explicit national security strategy, a desire to engage in various actions that can protect not just U.S. interests, but U.S. and allied interests, and can result in containment, a strategy used in Cold War I, rolled out by President Truman around communism. Containment was the strategy that is also the strategy being rolled out in Cold War II, which has bipartisan support. And that means keeping pressure on China to prevent kinetic active warfare over Taiwan, pressure on Russia to bring the Ukraine conflict to an end, and then pressure on other sponsors of terrorism and narco-terrorism like Venezuela.
Jason, we better leave it there. If we don't talk to you before the end of the year, have a wonderful holiday and a great 2026. Thank you very much.
And you as well.
Jason Schenker, President of Prestige Economics. Thanks for watching Commodities. You know what's coming next, The Close with Marella Fernandez.